The Fed's expected to hold off on cutting rates until September, but could it then make a bigger cut? Welcome to Market Insight, I'm Thomas Warner. Investors are virtually certain that the FOMC's first cut won't come today, but at its next policy meeting in September. The only disagreement is whether that cut will be 25 or 50 basis points. With no meeting set for August, policymakers will have more than 6 weeks of data to pore over before they make their decision. With me to give her take on the Fed and this week's other big central bank stories is Hetal Mehta, Head of Economic Research at St James's Place. A very warm welcome to you, Hetal. What would US policymakers need to see to justify that 50-point cut, do you think?
I think the bar for that is very high. We've just had strong Q2 GDP numbers. Inflation in some areas is still a bit sticky. We haven't got to target. So the bar would be pretty high. We'd have to see a much weaker employment picture. And we've seen some cooling, but let's face it, the labour market is still relatively strong.
So it sounds from what you're saying, Hetal, that you believe that the most likely outcome from that September meeting would be a 25 basis point cut.
I think that's most likely, and you don't have to roll back too far when actually the market was probably pricing out any cuts this year. So to think that they can suddenly flip to a 50 basis points move is, I think, a little bit of a stretch.
OK, well, we do also have the Bank of England policy meeting coming tomorrow. Opinion there has been keenly divided about the likely outcome, but our numbers currently put the chance of a cut at 64%. Do you think confidence in a cut is gathering momentum?
It certainly seems to have in the last few days. I'd say the bulk of the data we've had since the last meeting has been marginally hawkish. We still know services inflation is sticky, wage inflation is sticky in the UK. We've had some, obviously, economic sentiment numbers where the UK has been holding up better. So I think actually the momentum for a rate cut really just comes down to a lack of any other communication. That the inflation picture globally has been one where it's improving slowly, and so if we are seeing other central banks getting ready to cut, I don't think the Bank of England wants to be too far behind.
Well, we did get some fresh inflation readings out of Europe this morning. Obviously, the European Central Bank doesn't have its next meeting until well into September. But yeah, signs this morning that Eurozone inflation still looking sticky, staying north of 2.5%. So how do you rate the chances of any meaningful improvement in that over the next 6 weeks?
So I think you have to bear in mind when you look at the breakdown, and we've only had a very superficial breakdown in terms of the European numbers this morning. Energy inflation actually ticked up slightly. Services inflation, which is a bulk of inflation, ticked slightly lower. So it's always going to be a bit bumpy. No one expected the path to 2% to be a straight line. Overall, we've seen quite a significant deterioration in economic sentiment in Europe, particularly from Germany. And I don't think the ECB can be completely immune to that. So yes, slight upside surprise on inflation, but when you look at the economy as a whole, it certainly looks like another cut wouldn't be out of the question for the ECB in September.
And just finally, Hetal, let's look at Japan, where the bank has just raised rates to their highest since 2008. Bond yields and shares soared on Wednesday, but it's the yen that's likely to have the biggest impact outside of the country. What are you expecting?
So I think what we've seen from Japan is a move that was maybe slightly earlier than anticipated. As you said, the equity prices have gone up, and we have a positive view on Japanese equities. And I think we continue to see that direction of travel. So a stronger yen is certainly going to mean that they are able to import some element of deflation. But they are in a completely different space to most other developed markets.
They are indeed. Hetal Mehta, Head of Economic Research at St James's Place. Many thanks for your thoughts today. And that is Market Insight. Don't forget, you can watch more videos on Reuters.com.